Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. To begin with, we'll have ourselves a nice notepad for the notes. And as I said, we will open the webinar with an introduction to AvaTrade. So as many of you know, AvaTrade is a regulated company. We're here since 2006, nearly 20 years. And we have 9 licenses worldwide. Our customer service is right here in case you got any question or queries. You can chat with us live or on the WhatsApp. And of course, as I have explained in the beginning, this interface we will use today is called a web trader. So if you have a question and you don't have this button here because you are using a different interface, you can contact us via customer service at avatrade.com at this address directly. Okay, and they will assist you with everything under the customer service umbrella, questions about your account and so on. And related to trading, you can ask for a senior account manager to be assigned on your file. Usually it happens automatically depending on your eligibility, but you can ask for customer service in case you don't have one. And a senior account manager can assist you with all the trading side. So strategy is an example, analysis, risk money management, and so much more. This is things that the account manager can be, you can address the account manager with. So we said customer service for customer service, a senior account manager to cover all the trading side, including if you need any assistance with this guide through about the web trader or anything else, to be frank. Okay, as I said, we will continue with the web trader, but I might as well jot down the other platforms that we have. So that's the web trader at the maybe at the bottom we'll put it. And then we've got MetaTrader 4, MetaTrader 5. We have some unique features in there as well. We have Ava Futures and Ava Options and Ava Social. Lastly, Ava Social. Now, the reason that I jot down all of those platforms is for you guys to know. We will not speak about all of them today, but we will proceed with the web trader. Just a few words about Ava Social. The reason is because this is a webinar for beginners, and Ava Social has extremely unique features. It has features that can be extremely helpful for beginners. Okay, so one of the features is to follow, the other one is to copy. Okay, the reason that it can really help you as a beginner is because as a beginner, I'm not always sure about my next move, and I'm not always equipped with a good plan and strategy, which means that it could be helpful to see another strategy without me trading. In other words, when I choose to follow, let's suppose that we are trader A and we would like to follow trader B. Okay, what will happen is we will get notifications with the positions the trader A has, trader B traded, and we can just follow his strategy. It does not mean that the account will open position by itself. It's not automatic trading. It's receiving notifications. You can look at it like a signal. Okay, our notes just disappeared. Maybe we'll open that again, just a second. Okay. Sorry about that. It seems like it's not really cooperating with us. There we go. So to follow means we're just going to get messages, and we can do this the same if we want, the same way that trader B traded. And copy from the other end is automatic trading, where we can link the account to another account, meaning that the strategy will run automatically without us opening the positions. There will be open automatically by trader B. The huge advantage using the Ava Social app is that you can also decide what kind of float size will be in proportion to your account. In other words, let's suppose that we are trader A again, and our balance is $10,000. But we would like to copy trader B that has $25,000. In this case, naturally, trader B might open positions that our account might not be able to take. okay, because it might use a different level of margin in these positions. In this case, what we can do is we can just adjust the lot size in the app and to go with a lower lot size that is compatible with our balance. It's one of the things that you can do, and I think it can be very, very helpful, give you the necessary flexibility to still copy a strategy without to exaggerate. Well, of course, if I don't want to change the lot size and I want to keep it as it is, I can keep it as it is. But I'm just telling you to have an option. Okay, this is about the app, the Ava Social download for free, and you guys can definitely enjoy that, whether if you're a beginner or not. Now, the web trader is what we're looking at is obviously the desktop version, but if you would like to find it on your phone, you can look for Ava Trades trading app. Ava Trades trading app, okay, on your device, which has similar interface, slightly different since the computer screen is displayed differently than the phone, but the features that I'm going to show you today can also be found on your on the app. Okay, now what we're going to do is we will begin from the top going down, going through those menus to see what can be helpful for us moving forward. To deposit and withdraw. In here, you can trade, is where we are at right now. Underneath, we've got positions to review all of our open positions, and we've got orders for pending orders and so on. Underneath, we've got history if we would like to go back. By the way, what I wanted to tell you about Ava Social is if you would like, either if you're following, if you're copying as an example, and you would like to go back and see which strategy your account is using, what is actually happening in your account. Okay, it's automatic, yeah, but still we sometimes want to go back and review the positions. We want to see what has been done. So this can easily be done by going to the history after the trades are closed and to review by changing the dates here to what you want. Underneath, we've got signals. We're not going to delay about it too much, but just to bring it to your attention, if we take as an example the first one on the list, which is Dow Jones, we're going to click on View Signal. Okay, we see before that the signal is constructed by the signal production date. This is the newest. As we go down, it gets older. Okay, in here we've got take profit, entry price, and stop loss. Basically, what take profit does, okay, we've got 3 pending orders. Don't worry, we haven't we didn't get to the second part, but this is quite mandatory for you guys to understand how the signal is constructed and how to utilize it. And this is why I'd rather explain it to you now. So we have 3 pending orders, which is pending buy or sell. Okay, in the MetaTrader 4 and 5, it can be called buy or sell limit. And the other things that we've got are take profit and just a second, stop loss. Both are pending orders. Okay, automatically activates when reaching the price. What does that mean? It means that take profit close the position automatically with a profit. And stop loss close the position automatically with a loss. Why is this useful? Well, obviously, I don't want to sit by the computer the whole day. And I would like to automate my trading and save a lot of time by doing that. So we've got, as I have explained, orders that are we can buy or sell now. Okay, we'll click on the arrows to expand that up, and then we can either buy or sell now at the current price. What's the current price? 39,978. So we can buy or sell now, or we can have a pending order to automate the entry, okay, which is a pending buy or sell. And the stop loss and the take profit, as we said, will be responsible to close it with a profit or with a loss. For instance, if we are in a buy scenario, our intention is that the value will always increase. First, before we move any further, it's important to have the same picture we've got to the right displayed to the left. As you can see, there is a difference between the picture displayed in here, the picture displayed in here, and this doesn't allow us to properly measure which scenario to use. Okay, so there's certain things here, resistance and support and the signal last. Okay, let's quickly go back. We've got here the entry, which complies to the same level as the signal. Okay, this is now, it's already changed. If we scroll down, we can see that this is the primary price that the signal was analyzed. Okay, if we click on view signal, we see that since it's in a buy type, our intention is, we'll change it also the same to be like days, and then we can see that the take profit is designed to be in a higher price. Why? Because as we said, what the take profit does is it closes the position with the profit. Meaning, to close the position with the profit, if it's a buy, we need the price to get higher. If this would have been a sell, it would be the other way around. Okay, for instance, if we choose the buy scenario, let's click on the buy. We see that the take profit has to be higher than the current price. Okay, so if it gets higher, we're going to make profits. If it gets lower, then we will have losses. This way, we can also automate the loss and the profit by placing take profit and stop loss. In this case, we didn't need to do it. Why? Because we're using a signal, and this placed for us automatically. You see, I didn't change anything here. Let me show you again. If we close, so again, we're going to click on the signal. We're going to maybe expand, and then we see what scenario we want. It seems like this is a buy since Dow Jones is really in a bullish trend. But let's, for the sake of the example, click on sell, just to show you the other way around. Okay, in this case, with the sell, the take profit will be down and the stop loss will be higher. It's the opposite from the buy, right? I hope that this part is understood. Okay, this is why the take profit, which closes the position automatically with the profit, will be in a lower price. Specifically, at the price that we saw in the signal outside, which is based on support and resistance. I will give a word about support and resistance again, just to understand how the signal is constructed. But basically, what I'm showing you now is if Dow Jones will reach the red line, we will lose potentially 144. Okay, 142 at the moment. And if it gets down to the green line, we're going to make 285. How so? Because we've got 0.05. And as you can see, that stands for half an indice with Dow Jones. And we can see that those levels were constructed by the signal without us doing anything. And we can just select the scenario and we are ready to go. We can still make the necessary adjustments. For instance, if we would like to increase and have a whole indice with Dow Jones, then it will have an impact on the take profit and stop loss, but we don't have to do that. We can use the signal without doing anything addition. All right, sometimes you're gonna see signals that looks like this. As an example, if we look at the DAX, okay, we'll click here on view signal and we expand again. We see that this time we're unable to use the signal. How so? Because the market has already reached a key level. The support and resistance expected the DEX will get to, it already happened. So the signal is now futile. And if we try to use, even if we go with the buy, let's suppose we click on buy, then we don't get the take profit and the stop loss, and it's also not displayed outside. Usually it is, but in this case, because the signal is no longer valid, then we can't. Okay, we cannot use, it doesn't matter if it's a sell or a buy. All right. Any questions about the signal the signal section before before I carry on? Any questions about the signal section? Can we? Yes, yes, of course. Thank you, Michael, for reminding me. It's very important. I also wanted to say that you can on your phone, if you don't want to go into the signal section every time to receive the signals, you have a toggle to enable to receive notifications on your phone, and then you can physically get notifications and instead of going into the signal section manually, which can be very helpful. Okay, if we go down, and this is, by the way, this is technical analysis. Okay, technical analysis is what the signals are displaying here. Support and resistance are levels higher than the price, and resistance will be levels higher than the price, and support will be levels lower than the price. So if you pay attention in here, as you can see, I drew some lines, some green and some red lines, okay, to help emphasize the support and resistance levels. And this can help us indicate a potential movement on the chart. Okay, as you can see, lower level, higher and higher. There is also one here in the middle, but at the moment it's less relevant. So the signals are constructed with those levels of support and resistance, which can be helpful doing any analysis or using the signal itself, which is technical analysis. Why am I telling you this? Because there are two types of analysis. One is technical analysis, the other one is fundamental analysis. Technical analysis will be what is in the chart, and fundamental analysis will be news outside the chart, such as some kinds of events and articles and earning reports, interest decisions, tariffs, anything that is outside the chart but has an impact on what's happening in the market, we can call it fundamental analysis. Now, if we would, and the reason that I wrote both technical and fundamental analysis is because they need to be combined. We need to be combined. If the technical analysis would be the how things are moving, we set averages, support and resistance, and so on. The fundamental analysis will be the why. So it's not enough for me to say, okay, Nasdaq is moved from this point to that point. Let's see how many percentage is that. So for instance, we're going to take that, we'll draw a line, okay, and we can do some analysis, maybe even take the trend line, then we see, okay, but this is not enough. What I need to know more is that it happened because of something fundamental, right? There were news that had an impact on the market, and this is why it moved. Okay, well, I need to combine both of them to enhance my analysis and be more precise. All right. Now, if we carry on to the news section, it's exactly what we're looking for. Those are pieces of information, the pre-European market brief. It has an impact, obviously, on several things. If we scroll down at the bottom, we have 4 related instruments, and we can see crude oil, gold, Bitcoin, and pound versus dollar. We have different categories here. It's also important to say that the trading central is who's providing us with the news and with the signals. Further down, if we go to more fundamentals, we can find market buzz. And in market buzz, we've got this circles here, this bubbles here that we can select from. We can even search whatever we want if Tesla is right in the middle. But let's suppose we would want to look for Tesla, so we can select it from the list. In this time, we will just select the biggest one, Tesla 8,971. What an imaginary number of mentions. You can see that it gets bigger as the number of mentions increases. We can also look at it like a table, but I'd rather use it like this. We'll click on Tesla to understand what's happening with it. And we can see specifically here that we have different most discussed topics. And if there are new news feed here, and if we don't want to read everything, but we specifically want to see maybe a certain topic like the earning announcements, and we will click here on the box, it will separate the rest of the articles from the earning announcements. And we can specifically focus on that and do our research. We can deselect if we would like to clean the selection. And now we see how the measurements are displayed. We also have here the price may raise. We have here the price difference that already happened, and all kind of interesting things. We can filter it even more, but I don't want to delay about it too much, so I'd rather just go back and show you one last thing before we carry on to the second part. The last thing that I'm going to show you now is called the economic calendar. And in the economic calendar, what we can find is exactly the fundamental analysis we're looking for. It seems like some things here are already filtered. So what I'm going to do is I'm going to go for a cleanup, clicking here on the reset and clicking on today. And we notice that everything here is displayed, and that doesn't allow us to maneuver efficiently using the economic calendar. So what I would like to do is I would like to select the primary instruments that I need to analyze. This time we'll go maybe with the Aussie, and maybe we'll go with the yen and maybe the dollar. All right, and we can see there is a question here from Sagwane. What is the difference between VIX and fundamental analysis? Well, VIX is a fear factor measurement, and it's based on basically how uncertain the market is. So you can make comparison between what happened with, as an example, the tariffs. Okay, the question here, let me just reply to you so other people can enjoy your wonderful question. Thank you, Mr. Didi. And as I have explained, the VIX has correlation to the uncertainty and the fear in the market. So you can find connection between what's happening with the fundamentals, as we just said, whatever decision there is, whatever uncertainty there is, into the VIX. All right. Now, as we can see, after we have filtered, I hope it helped what I said. What we filtered now is what is displayed on the economic calendar, and it allows us to filter the specific flags instrument that we would like to analyze. Furthermore, we're looking at all types of events. What if we don't want to see the low and the medium? Because we're looking for the high impact, we're looking for the high volatility. What we can do is we can just click on high. We have 3 levels, low, medium, and high. High is the highest, obviously. And if we look at the upper right, we can see we have this nice magnify, which we can search for a particular instrument we're looking for. And underneath, we've got the impact, we've got the actual, we've got the forecast, and the previous. Why, as you can see, the actual is only displayed for what's higher than the red line. How so? Why we don't have any actual year at this column? Because whatever is displayed above the red line are things that already happened. This is why they are slightly grayed out. I don't know if you guys can see it on your screen, but on my screen it's a little gray out. Okay, this one is a brighter white. Okay, there is another question here from Seretse. What is the option on the left panel on Android app? I wish I could see that. I wish I could see that because I don't know exactly what you're referring to. What I would suggest is that you will contact your senior account manager, like I said in the beginning, and he can surely assist you. But it's difficult for me to assist you now. I don't know what you're referring to. Now, as we see okay, so we have got the previous result, what we expect that will happen, and what actually happened, which will only be displayed after the event took place. And we, according to that, can anticipate what will happen in the market. We can also see that to the right, we've got here impact, volatility, price chart, event chart, and my favorite, add the calendar. Why is this my favorite? Well, because this way I don't have to stay by the chart and think when the event is going to start, how many hours I've got. This way I need to prepare myself, I need to schedule my day because I want to be on the chart. When I'm analyzing, I want to see the news and then to trade. This allows me to book it into my calendar and to very easily have a reminder on my own calendar. And then I don't have to go to here to this calendar because I've got the reminder on my phone. I think it's fabulous. This way you just get a pop-up message and you can straight go to the chart, yeah, depending on which calendar you're using, and that's just great. All right, besides that, you can reset everything if you want to go back from all the filters. You can, like I did in the beginning, you click on reset, everything goes back. And I think we're pretty ready to begin the second part, guys, the practical part. So we'll click here on the Ava trade, which is a clickable icon. We'll go back to the default screen, expand the screen, and we will choose what to analyze today. I think NASDAQ didn't look too bad, isn't it? Let's try NASDAQ, click it from the here, and we'll click here on the column price, click here on the column price, click and drag to make it a bit more, maybe like that, that will be enough, slightly, okay? And we'll take it off, and we will begin here from the top going right. In here, we've got the search field. You just saw that you can erase whatever you want to erase, type down and select it from the list. In here, we've got the different time frames. At the moment, every candle on the chart is daily candle, so this is a daily time frame. In here, we can change the layout. As I have explained many times, if you change to the line, there are some parts that you won't be able to have. And as you can see where I have placed a rectangle to show you, you see there are these thin lines coming from the candles showing where the instrument has been and turned around. And unfortunately with the line, we're not going to have that. Yeah, we're not going to have, click on the arrows, click on the line, and now we're missing those parts. We don't have the reversal parts, which can be crucial when doing analysis. And to bring them back again, we just do this and they are back here. All right, if we keep going to the right, we've got here the crosshair. Now we've got no numbers coming from the candles. And that's why, because the crosshair is not selected. We'll change from no crosshair to crosshair. Now we do get the numbers displayed to the upper left. If we click here on the layout change, we can change to 2 charts, 3 charts, maybe even 4 if we want. And we can easily change the display chart just by clicking on it. And when you have the blue rectangle, click here, change to what you want, and then select it from the list, and it will change accordingly. Let's go back to the one. And in here with NASDAQ selected, we will click on buy or sell to open the order entry. I skipped indicators, and in here you can find all kind of things because we're using it now. There's no point explaining, we'll get to that in a moment. After we click buy or sell to open the order entry, we can design the position to what size of position we're looking for. Since we went through the signal through take profit and stop loss, we know that those three, pending buy and sell, take profit, and stop loss, are all three automatic orders. We'll erase everything, put NASDAQ instead, and with NASDAQ we have, as we said, execute when price hits, take profit, stop loss. All right, this is a pending buy or sell depending on the reference selected on the top. So in here we selected with the buy, this will be referenced with the buy, pending buy. In here it would be a pending sell. Okay, you can see what is selected when the blue is a bit brighter than the other. Okay, you can see in here we've got instrument details, all kind of information, very, very interesting, less relevant for us at the moment. Okay, so we see that NASDAQ was bearish in the past few weeks, and now it's finally starting to correct itself almost fully from the drop that it had. So if at the moment we're looking to see what differences it had, what we can easily do is we can just go to weeks, and then we can more visibly see how the market has shifted. And we can see that we are now almost at the same levels that we were half a year ago, right? On August. Okay, well, if we focus on those two candles, which is the 31st and the following week, we can see that during those 2 weeks, NASDAQ fell considerably and recovers almost fully. But now it's somewhere in the middle. Yeah, I hope everybody can see that. So we're looking at the down, up, down, and now recovering. And I have a reason to believe that NASDAQ will fully recover. In this case, my agenda will be generally a buy. And with this buy, I need to now think what price is realistic to aim for. So I'll switch back to days. And with days in mind, I'm going to select certain levels of support and resistance. This will be my primary. Actually, this will be my primary. This will be my secondary. And this is the current level that we are at right now. Roughly $150 difference between this one to the next. And we've got the other one at 19,309. All right, now when we are with the buy and we are thinking about taking 0.01, we will enable 3 pending orders, just like that. And now we can specifically select at what price we would like to buy. We can also automate when the position will be closed with the profit or when the position will be closed with a loss. All right, let's suppose that I would like to target the green line. It seems okay, it seems maybe good to me, and okay, this is not bad. So the high will be 20,039. Maybe we'll go a little lower, make it a flat 20,000. Great, so we've got 20,000 and we'll get a little higher. Let's make it 19,310. Okay, the white line. So this is another resistance, this is another resistance. We understood this from the signals. We have other lines as well here at the bottom. So the lines at the bottom are support. The lines at the bottom are resistance. Okay. In this case, what we can see is if NASDAQ will go any higher, we will make profits. And if it gets any lower, we'll have losses. Okay, we're familiar with the green and the red rectangle from the signal section that we just saw. And now we can see that if it gets to the upper area, we'll make profits. Go down to the red area where we'll have losses. All right. Maybe we'll change that line to be red as well. And we will initially target the resistance to be our take profit. Let's make it 20,000 flat. And let's suppose I don't want to buy now. I want to buy when it's a little higher to ensure I'm doing the right thing. And I'm going to buy at 19,000 instead of now. Meaning this opens and close the position, open the position with a buy or sell automatically. This one closes with a profit. This one closes with a loss. Excellent. Now, if my entry will be 19,000, okay, and I now want to target the take profit to be at, oh yeah, like this, and our stop loss will take the same ratio. We'll make it 18,000. In this case, what we're looking for is $1,000 up and $1,000 down. We're holding 0.01, which equals to 1 unit. Great. In other words, another nice thing to know is when we buy or sell 1 unit, every $1 movement equals, okay, we'll put it like this, $1 profit or loss. In other words, we can go units times movements equals potential profit or loss. You don't have to remember that because the platform is doing it for you automatically. Same for here. And just by placing the take profit and the stop loss, we can see we can make or lose 1,000. If I choose to increase and have maybe 2 indices, it will become, just a second, 2,000, right? If I will increase to 5, it will be 5,000. If it's 10, so 10,000. Yeah, very, very simple. So if I want to target this green line as my take profit, I need to know that it's a realistic price. So my entry is here, my take profit is here. Okay, we're looking at days. I think it's more realistic to look at weeks. Okay, if I'm looking at the weekly chart, and we can see that this is, again, we're looking at $1,000 difference. What I can do is I can compare the previous candles, look at the numbers, and just subtract the open from the close and the high from the lows. So if we specifically analyze the previous week in here, sorry, the previous week is in here, but it's much different than the other candles. As you can see, those 2 candles are much different than this candle and that candle. Actually, we'll take the small one. I think it will convey the message even better. So we'll take the previous week. Previous week, the date is 14/04/25, and the open here, we'll put open, close, high, and lows, and it's all displayed to the upper left, right here at the rectangle. And we can see the open here is 19,010, close is 18,303, high is 19,255, and low is 18,115. Great. All we gotta do is just subtract to know the differences, and we can immediately see that this one is 697 and the other one is, now what are those numbers? Those numbers are numbers from last week. Those are the numbers of what Nasdaq did last week. It opened at 19,010. It started going down. It reached 18,115, and then it recovered. Sorry, when it started, it went higher. It went higher. This is the tail we see here. So first it went higher to 19,255, then it went down to 18,115, and it closed a little higher. How can I possibly know that? Well, because the shape of the candle. And if we analyze specifically what happened, we can see up, down, up, and closed right here, which gives the candle the shape that it has, up, down, and up. Okay, but this range is too much. 700 and 1,140. I don't know, the take profit that I'm looking for is $1,000 away. I'm not sure that this will suffice. What I actually need is to grasp many, many more candles and then accumulate the average in between, which is extremely time consuming to do. What I can do instead is I can click here on indicators. In here, I type to filter to type AVE, click and drag it to the right, and now I can just select how many candles I want to analyze. In this case, the default was 14. I minimized it to 10. And we'll put a color that doesn't confuse us, like this mustard thingy. And we can see that the actual movement for Nasdaq per week is not 697 that we had, is 1,340, which makes the green line that we've marked achievable, at least realistic. We know that it's realistic. All right, so let's suppose that I'm happy with the 1,000 per week comes down to 4,000 a month. Not bad. Okay, and I would like to write down the 1,000 as a target. That will be my target. Underneath, I also put down the time that I'm analyzing, which makes sense, 1,000 per week. Okay, I can always change that, and I can always change the target, but it just makes sense, so I don't want to touch it. The next thing that I'm going to write down is the movements. Okay, so what does that mean, movements? Movements, also known as price difference. Price difference, because this is the difference between our entry, which is a pending buy for 19, to the close, which is 20,000. Great, so this is 1,000. And as we roll down, because we've got one in the C and we're moving $1,000, we can make or lose $1,000. Okay, take profit goes to 20,000, stop loss goes to 18,000, entry is what we selected, and the entry will be 19,000. Oh, we already wrote it up. Great. So we'll keep it like this. The only thing that we will change is we will add the profit and the loss. So we've got $1,000 in here, also $1,000, which stands for 10% of the account. How so? Because the balance, as you can see, is 10,000, and we can make 1,000. Great. Moving forward, the last ingredient that we want to find out will be the units. But since we don't need to increase the lot size by any factor, we're already making exactly how much we wanted to make. If our target would have been 2,000, as an example. Oh, I think something happened with my screen. Just a second. I think something happened with my screen. I apologize. Let me try and fix that. I'm not sure that you guys can see. I'll try that again. Guys, can you see my screen? Because it froze on my end. If you can comment in the question section, that will be great, because it shows me like okay. There is a question here from Melanie. What time frame is appropriate for beginners? The higher time frame or the lower time frame? Well, froze. That's not good. Let me try. Maybe now. What about now? Is it showing now? It seems like it's moving. I'm not sure if it's moving for you guys as well. Not moving, okay. Now it's supposed to be better. Now it shows me that it's running. I hope that it's running for you guys as well. Thank you for the question. Okay. This is an excellent question, Melanie, and I'll explain to you in exactly a moment. But what I wanted to write down for you guys is to find the units. And in this case, oh, it froze again. That's not good. All right, let's try that now. Okay, it just doesn't allow me to do that. I really apologize. Unfortunately, it keeps freezing like that, and I can't display it for you guys. I'll try to enable it again. Just a second. Maybe now. Okay, now it seems fine, and we'll make it equals units. Great. Now, the question Melanie asked is to what to target. Okay, what time frame is appropriate to choose, the higher time frame or the lower time frame? Mohammed, you're asking where can you just a second. Can I start trading after the session? Yeah, of course. Of course you can. You can definitely start trading after the session. I'm just going to answer your questions, guys, without sharing the screen because it's frozen, unfortunately. I will answer your question, Melanie. The time frame that you are choosing is not depending on whether if you're a beginner or not. It depends on how long you're choosing to hold a position. So for instance, if I know that I'm going to hold this position for a few hours, I'm going to make comparison with hourly candles chart, and I will design the position based on the average true range that we added for hours. And besides that, if you choose a certain price, which is, let's say, the 20,000 that we choose as an example, and our time frame wouldn't be 1 week, but it would be hours, then you will see with the ATR that the average per hour is much different than the average per week. Okay, let me just show you that. I think my screen is back. I really hope so. You can see that the average per hour is only $94. It's not close. It's not even close to the price that I've analyzed. See, 20,000 is $1,000 away. But in a week, even a day, it's difficult. Even in a day, the average is half of that. But if I look at the weeks does make sense. We are in the range. That's the difference. Okay? So there are two things that we can acknowledge. One is how valuable time we want and the trading style that we're using. If it's scalping, right? Scalping, intraday, or swing. And the second thing is, as we've explained, how realistic the price that we're aiming for. Is it something that can happen in a week? Is it something that can happen in a month, in a day, or in an hour? And make the necessary adjustments. Now, I think that the screen is back. Am I right, guys? I think now it's showing like it's moving. So we can proceed. But to quick up, because we got disrupted, to quick up what was done here. Initially, we just had roughly analysis that Nasdaq is going up. Then we targeted the primary resistance line at the 20,000 mark. we also selected a take profit and the stop loss based on that. We targeted 19,000 to be our pending buy. In this case, our take profit should have been $1,000 higher based on this resistance line, and the stop loss can be the same proportion downwards, meaning that now we can see 20,000 is possible take profit and 18,000 is stop loss. Potentially can make 1,000 for a profit and 1,000 for a loss. Excellent. And since this is what we wanted, we don't need to increase the quantity that we take by any factor. It can stay 1. If we would want to make 2 or 5,000, we should have increased the quantities to have more indices. Now, the last thing that will finish this equation is to know that we have the budget to take the position. So how much budget we need? Well, we can see that the price per indice, price per unit, let's call it a unit, is 18,920. And the number of units we take is just 1. What's displayed in here? So if we multiply this by that, we will see that this is the same value as the buy, right? And if we go price per unit times number of units, then we get the value. And is there an AI on AvaTrade? I believe that we have a third-party company that can give you a solution for that, but directly, no. Directly, I believe that not yet, or maybe I should say no, because there is no ETA for that. And then we can look at something called leverage. What is the leverage doing? The leverage multiplies buying and selling. In other words, thanks to the leverage, we need 20 times less, because without the leverage, we would have needed 18,000 to take this position, which we don't have. But since we're multiplied by 20, well, we can divide the value by 20 as well. So instead of 18,000, we just need 946. Okay, so we can go value divided by leverage equals margin requirement or margin impact. Yeah, but okay, as we can see, the conclusion here is that we can definitely open the position thanks to the leverage. I'm not getting into the discussion here if it's good to use 10% of the to use 10% or not, because this is also something that we need to pay attention to, how much margin we're using, how much money is already in use, and how much available margin we've got. I'm going to explain to you something very important that I hope that all the beginners here will remember. When you can't fulfill the margin requirement and you go below the necessary margin level, the platform will close your position, beginning from the biggest to clear up margin and defibrillate the rest of the necessary margin. In other words, you always want to keep your margin level healthy. Always, okay? Always keep it healthy, above the 100%, way above the 100%, so you can sustain and easily open a necessary position based on your strategy. Unfortunately, guys, I know that we didn't quite finish the webinar as we want, because I also wanted to help you adjust the ratio between the profit and the loss, since this is not optimal, and sometimes we want the ratio to be better. And we don't want to make 1,000 or lose 1,000, since if we take 5 positions like this, we'll end up either making or losing 5,000. What sometimes we want to do is we want the ratio to be better, And instead of 1 to 1, we can make it 1 to 4 is an example. How can this be done? Well, very easily. The way that this can be done is, just a second, if we get the stop loss closer into the entry, that helps us minimize, and instead of $1,000 away, we can have it only $250 away, which brings us to 18,750. 18,000 we said. This way we get a potential profit of 1,000 and a potential loss of 250. How did I possibly got to this number? All I did is I divided the price difference we're looking for by the number that I want to get. So this 1,000, I've divided it by 4. This is how I got to the 250. I know that it's a bit fast, but I've got no additional time to explain it to you since our time has run out. But you're all welcome to join us next week. And to recap, hopefully everything will work fluently. And until then, guys, I hope you've learned something good from me today during the webinar. You can watch the recording later on our YouTube channel. I wish you best of luck with trading. Have a fruitful week and see you next time. Have a good day.